Hello, welcome to the Fringe Benefits Tax tutorial. I'm your host, my name's Phil. Now, I'm going to guide you through the different aspects of fringe benefits because that's a fairly delicate issue in terms of income tax. Now, a fringe benefit is a benefit that an employer provides to an employee with respect of employment. So to start off with, you've got to have an employer and an employee relationship. So the employee has to be on the books earning wages and salaries. Now, the second part is there has to be a benefit that is provided to the employee in respect of their employment. So that benefit may be that benefit's generally a non-cash benefit. So when we get these two components, and bear in mind, an employee can also be the director. So for those of you who have heard people saying that directors are exempt from fringe benefits tax or FBT is not applicable to directors, that's a myth. That's definitely not true. Because let's say if you're a director and you're using any company's cars, or your company is paying you for some sort of benefit, then the company has to still lodge a fringe benefits tax return. Now, having established a fringe benefit and that a fringe benefit exists, what are the different components of FBT? Well, to start off with, we need to determine the actual year of the FBT. So FBT falls between 1st of April to 31st of March the following year. Now, this may be confusing to a lot of you, but in terms of when a company does its tax return, it could provide an advantage for a company, because when you have a fringe benefits tax expense, and a fringe benefits tax, usually these are deductible for the company and deductible in the company's tax return. So this gives the company a bit of time to sort out their fringe benefits options or their fringe benefits obligations, to lodge a fringe benefits tax return between the 1st of April this year and the 30th of June when the financial year ends. And having done so, any fringe benefits amounts are tax deductible in the company. Now, what are some of the, before we go to some types of fringe benefits, we need to establish what is the tax rate of the fringe benefit. Now, fringe benefits is taxed at 47% of the tax, what we call a taxable amount of the fringe benefit. So 47%, that represents an individual's highest marginal tax rate, which is 45% plus 2% Medicare levy. Now, there's different components in working out the fringe benefits. First of all, you need to work out a taxable value. Now, I'm going to show you a little exercise later on when we work out a car fringe benefit, but basically a taxable value of the fringe benefit is what is the value of the benefit provided. If it's a non-cash benefit, we still need to determine the cash equivalent value of it. So let's say you as an employer have provided to your employee or paid for your employee membership fees and other types of expenses, for example. Now, these are cash benefits. They could also be classified as non-cash benefits if it can't be determined the value. But I hardly think that paying for membership fees means that you're unable to determine the value of it. But you get the overall value of the amount that has been provided to the employee as a benefit. Now, there's two different types of fringe benefits. When you need to gross up a fringe benefit value. So this is what we call a type 1 and a type 2 fringe benefits tax, or a taxable amount with the gross up rate. So a type 1 benefit is a benefit in which the employer would be entitled to claim GST credits on expenses that they pay. And entitled to claim GST, when they do their BAS every quarter or every month. So this type 1 rate is a higher rate, and that's 2.0802. The type 2 fringe benefit, an example of a type 1 fringe benefit includes car fringe benefits, expense fringe benefits, and perhaps living away from home allowances. Because all these things, they do attract GST credits, and GST credits can be claimed on those types of expenses. A type 2 fringe benefit is where an employer would not be entitled to claim a GST credit on expenses that have been paid. So an example of a type 2 fringe benefit will be a loan fringe benefit. It may be paying your employees' children's school fees. There's no GST credits on there. So the type 2 benefit has a lower rate, which is 1.8868. Now, these numbers are available on the tax office's website under the fringe benefits section. The tax rate, the different types of fringe benefits, and what they fall under, whether they fall under the higher rate or the low type 1 or type 2, that's all available on the ATO website. So when you get a taxable value of the fringe benefit, you then multiply it by one of those two gross up rates. That gives you what we call the taxable amount of the fringe benefit. And think of it as like a taxable income, but it's in terms of a fringe benefit. So the fringe benefits taxable amount, or the fringe benefits taxable income. Think of it like that. And that's what you're assessed on. So you as an employer are assessed on the taxable value multiplied by the gross up rate, whether it's a type 1 or a type 2. When you do that, that's your taxable amount. And then you multiply that taxable amount by 47%. That gives you your overall fringe benefits tax liability. Now, how do you do a fringe benefits tax return? Well, that's integrated in the company's tax return. Usually a lot of good software providers integrate this fringe benefits return with a company's tax return. You will need to register for fringe benefits. So if you are a business owner and you have access to your business portal, if you have access to your ABR using your ABN and MyGov ID, you can set up a fringe benefits tax registration. And that way the ATO knows that you are paying some sort of fringe benefit. Now I'm going to share my screen. Hopefully you'll see this Excel worksheet. We'll do a quick calculation of working out a car fringe benefit. So car fringe benefits are the most common fringe benefits that companies report to the ATO. Now, the car fringe benefit has two different ways of working it out. The first way to work out a car fringe benefit is using the statutory method. Now, what that is, the statutory method, it works out a 20% amount based on the expenses of the car. So let's say you're selecting the 2019/20 fringe benefits here. It works, you need to work, we don't work out the expenses of the car. We work out the base value of the car. So let's say the base value of the car is $30,000. Now, usually the employee will, so we go base value of car, $30,000. Now, let's say the employee contributes $1,000 for the whole year. So you're left with a amount of $29,000, which is basically the taxable value without accounting for the gross up rate yet. So that's a taxable value. You use the base rate of the car, base value of the car, minus any employee contribution. Then you need to determine whether you held the car for the entire FBT year. So for the purpose of this exercise, we'll say yes, you've held the car for the entire FBT year. Now, the car has to be made available for the employee's private use. So in this case, you need to answer a question whether the car was made unavailable for the employee's private use at any time during the year. So we'll just select no, because it was made available throughout the whole year. So now the taxable value, you have a value of $30,000, then multiply formula 20%. So you get 30,000 multiplied by 20%. So that's 6,000 less the employee contribution, which is 1,000. So you're left with a taxable value of 6 minus 1, $5,000. That's the taxable value of the benefit using the statutory formula. So $5,000, then it is a type 1 gross up rate, which is 2.0802. Sorry, I'll put 1.0802 here. It should be 2.0802. So we have the taxable amount of the fringe benefit, 5,000 times 2.0802. The taxable amount is 10,401. So then the FBT liability is at 47%. So 10,401 times 47% is $4,888.47. So when you use that in your fringe benefits tax return, you will be able to claim that in your company's tax return as an expense. It's just called fringe benefits tax expense. Now let's use another method for working out the car fringe benefits, and that's called the operating cost method. What that is basically is you get the total car expenses for the whole year. You can select that you provide a total for all of the operating costs incurred on the car. And let's say the total operating costs are $8,000 for the whole year. Now the percentage, so $8,000. Now percentage for private use, let's say it's been used 30% for private use throughout the year by the employee. So 30%. And let's say the employee contribution contributes the same amount, $1,000. Now, the employee has an option to contribute any amount. So if you don't contribute anything as an employee, then that's fine. It just depends on the agreement that you have with your employer. Now, you've got $8,000. The percentage for private use is 30%. You've got the okay, so equals 8,000 times 30%. So the amount is, so the value of the benefit provided is $2,400. Now the employee contributes $1,000. So we have a taxable value of $1,400. Now it's still a type 1 gross up rate, so we'll copy this sheet and we'll paste it there. So then you have a taxable amount equals 1,400 times 2.0802. So the taxable amount of this fringe benefit using the operating cost method is $2,912.28. So then the FBT liability on that, let's just copy these cells, is 2,912 times 47%, which is $1,368.77. Again, that's the amount that you can claim as a tax deduction when you do your fringe benefits tax, and also in the company's profit and loss statement and in the tax return. That's your fringe benefits tax expense that you can deduct. Now, one of the other fringe benefits, categories or types of fringe benefits is expense payment fringe benefit. Now, what that is basically your employer pays on your behalf all of the expenses that you would have incurred in respect to employment. So let's just type in, say, professional membership fees, mobile costs, stationery. Okay, so let's say your professional membership fees cost $900 for a year, mobile phone bills cost $150, and stationery also costs $100. So you sum them all up, which means that your employer, the taxable value of this expense payment fringe benefit is $1,150. Now, this is also a type 1 gross up rate because it means that all these expenses are included. They do have GST credits. They do attract GST, which means the employer is entitled to GST credits on all those expenses. Then you have a taxable amount after working out your gross up rate, $1,150 times 2.0802, $2,392.23. Now, this next part is very important. Now, there's a rule around expense payment fringe benefits. You as an employer still need to declare those in the tax return, in the FBT tax return. However, there's a rule called the otherwise deductible rule. Now, that simply means that where the employee would have been able to claim these expenses as part of their normal work-related expenses, and the employer has paid these expenses, the employer can use that otherwise deductible rule and therefore reduce the taxable amount to zero using the otherwise deductible rule. And then that means there's zero fringe benefits tax liability, but you still have to declare that you have provided that benefit to the employee, but you can use this otherwise deductible rule in terms of the expense payments fringe benefits. Now, these list of expenses, it's not an exhaustive list, because you as an employee could possibly be paying for self-education costs. There are courses that may result in you getting an improved employment, or getting a better job, or getting a higher rate, or improving your skills. And if that was otherwise deductible to you in your individual tax return, and your employer pays for it, well, then the company, well, I'm going back now to say you as the employer, can also include any of these expenses that you've paid for your employee and use this otherwise deductible rule in order to bring the FBT taxable amount to zero. Unfortunately, we can't use this otherwise deductible rule for motor vehicles when you have provided a benefit for the employee for their private use. So I hope that this tutorial of FBT, there are different types, different components of FBT, how to work out your FBT. I hope that it's been enlightening for you, but please, you need to be very wary that this is not a substitute for financial advice. If you do need to discuss more specific matters, feel free to contact me and I'll be happy to make an appointment with you.